Hello everyone, this is Evan from the Trade Risk here on Saturday, February 6th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, individual names, and then some trade ideas heading into next week. Now, the S&P 500 this week lost 3% and closed at the lows of this important range that we've been watching and trading in for the past few weeks. Now, if we look at where we've come from, we started the week near the highs. We closed last Friday at the highs, top end of this range. Monday, we tested the top end of this range, and that was about it. Tuesday was when we gapped below, back to the midpoint, and then for the rest of the week, we essentially just thrashed around the mid to lower end of this range. So 187.25, this is an important level for the market. We've held here for the past several weeks, and we only really closed and traded below there, effectively 2 days, and those essentially put in the lows for this year. So the worry going into next week is if these lows give way, we would have to expect that the market's going to continue to roll over, perhaps retest or even break below the lows that we made back in January. Now, there are a couple of bright spots. One thing I'm noting, which I look at every day, is the McClellan oscillator. And what I like right now is that the McClellan oscillator is actually still in positive territory. Now, that can completely change next week. It doesn't mean, that we shouldn't be concerned given the way the market closed Friday, but what it does tell me is you're starting to see the exact opposite effect from most of what we saw in 2015, where we had the high growth, high capitalization stocks that make up the majority of our ETFs, the Google, Facebook, Amazon, Apple. They're actually under pressure right now. They're being sold off, and we're starting to see the indices, these major ETFs, look more bearish just because they have a higher weighting there, whereas the majority, or at least a portion of the stock market as a whole, is actually trying to hang in there. And to me, that is slightly constructive. Again, it's small, what I would consider positive divergence at this point. I like that. I'm just aware of it. When the McClellan oscillator and price action sort of start to stray and do something a little different, that gets my attention. So I notice this right now. Again, I don't think that we should expect that the market's going to hold here and break out to new all-time highs, but it's something to just keep an eye out and see how these continue to trend and develop over the next couple of weeks. So again, I think if we see us lose 187.25, start to get a close below that, I think you have to be concerned that this downtrend is going to resume. These lows, will be retested or perhaps taken out. And I think you need to adjust accordingly, protect your long portfolios or look for short opportunities. Some of those we'll talk about later in the video. But for now, we are still in this range. We'll see how this plays out. It hasn't broken yet, but it certainly looks vulnerable here heading into the weekend. If we look at the IWM, a different picture here. You can see if we had this little rising trend line of support over the past couple of weeks, firmly been taken out now, given Friday's close. We had this quick fake out here on Wednesday, but the bulls really couldn't add a whole lot of traction to it, and we're right back retesting and at those lows from Wednesday. So that is troublesome. This looks, again, very vulnerable here. Fast-moving averages racing lower, favors the bears and the short sellers right now, for sure, heading into next week. Now, the real problem, though, is if that one wasn't bad enough, it's the Qs that certainly are painting the bleakest picture now heading into Monday, because they're already essentially at the lows here that we made last or a couple of Wednesdays ago, the lows in 2016 so far, and this is the lows on January 20th. We're almost back at that level in the Qs. And again, we talked about that. A lot of these tech names and the high growth names that are part of the Qs are under pressure recently, but you can see if you go to a weekly chart, this is very important support. We really haven't been below this since 2014. So that's, except for this brief kind of flash crash washout day here back in August of 15, this is an important level. So we need to see if we can quickly reclaim this. Otherwise, we are certainly vulnerable for continued rollover here in the Q. So I think this is one of the most dangerous pictures that we're seeing right now. The IWM, I mean, this already broke down, but we hadn't quite seen that happen in the Qs. And in the SPY, you can see we're still holding that support right now, basically from, going all the way back to 2014. So that's sort of the cause of concern. If this is a new part now of weakness that we're going to see rotate into the market, I think that's what you need to be worried of. This is going to be something that you should pay attention to heading into next week. Again, the bulls quickly have to reclaim this, really this $100 level, which means we need to see a gap up and, some type of false breakdown here in the Qs early next week. Otherwise, you're going to have to be very careful in any of these names. Now, if we look at some other markets, TLT continues to just march higher in this very strong uptrend. Nothing's changed here ever since breaking out back in mid-January. It's been off to the races, so nothing new there. Still looks great. Gold continues to look good now as well. Monster day on Friday, and this one's racing higher, coming into some overhead supply in here right around 112. Looking at a weekly chart, you can see we spent a lot of time chopping around at this area for 2015. So expect some overhead resistance to try and kick in now, but certainly seeing a flight here to gold, 5% up week, looking pretty impressive. Silver, similar situation. Friday, we saw this big surge here, lagging behind gold. Perhaps this plays catch up. This broke out a little bit later. It hasn't had quite the magnitude and stretch like gold has had, but it did clear this very important 13 3/4 name level. We got involved in this long. We continue to hold long via the leveraged triple long USLV. And we continue to hold our full position there. We haven't taken any profits, but any type of gap up on Monday, we would probably start harvesting some of those profits. Again, momentum strong to the upside, stretched in the near term, but certainly, you could see some type of vacuum move all the way up to this 14 3/4 now as it gets to the top end of this range that it was in for most of 2015. So the metals looking really good. Again, most of that fueled now by the falling dollar as it broke through and really cratered here on Wednesday of this week. So as this starts to unwind itself, you're going to see a much easier road for higher prices in commodities like the silver, like the gold. If we look at USO, this couldn't quite hold these gains here on Friday. It had a week of down 7%, so still not a very constructive week. You can see the downtrend still in play here, but it is holding up around 855. We found dip buyers here again on Wednesday of this week. So we'll see if this can continue to hold and build some type of higher level of support and not just immediately roll over to retest the January lows. So we'll have to see how this acts going forward. Again, moving averages trying to flatten out, but haven't quite gotten there yet. UNG, this one, a big rollover here after trying to break back out. Very messy chart. Look at all the gaps here, but trying to get going on Friday, and then Monday coming back down with a strong, with a big gap lower. Tuesday with another gap lower. So this thing's just a mess right now. We'll have to see if, it looked like we were in stages of potentially bottoming here. We potentially still are. We haven't retested the lows back from the end of 2015. That's constructive, but still you need to see this price action smooth out a bit. This erratic gapping behavior is just not very constructive right here, so it's tough to really play this one. So just needs more time in my opinion. We'll have to see what comes of it. Now, if we start to move into some of the sector analysis, XLU by far still just running away and outperforming everything else. If you look at a weekly chart here, up 2.5%. This is actually a sector we jumped into last week on a conviction trade, which means we allocate a larger position size to it. As it started to break above $45, we got involved in this, and it continues now to work well. We're still looking for more. Again, when the market is really soft like this, when TLT is ripping to the upside, which means yields are going lower. There's a hunt for yields. There's a hunt for some of these safety plays. this looks like a theme right now, and without too many other places for kind of safe haven money to run to, XLU continues to look really well and outperform right now. So we're hanging out in that. As far as other sectors, XLB, we discussed this in the midweek video recap. This is certainly a change of character here, up 5% on this overly beaten down sector. This is something to take notice of. You might be seeing what starts of a start to what could be a big trend change or a theme here with materials catching a bid. Again, I would have to believe this is mostly due to the unwind in the dollar, as this sector would typically do better in that type of environment. We'll have to see if this is just kind of a one-off, one-week thing, or is this going to be, the start to something bigger. There's still a lot of damage here, but notice how quickly these fast-moving averages are reversing course here and now moving into bullish alignment. So certainly something you want to keep an eye on. Same thing with the industrial space here. Not quite as strong as the materials surge that we saw, but still something to keep an eye on. You can see the fast-moving averages starting to try and cross over here. I think we closed about flat on the week, so we still held up this week, slightly positive, which is an outperformance, just given the way a lot of these other sectors went. Still the staples too, these continue to just kind of hang out, defensive, moving sideways, not getting beat up too much, and even energy still holding in there, all things considered, not looking completely horrible. This week, certainly technology was taking the big hit, so that's where you'd want to be avoiding this space right now until you can really see some more proof that this is going to hang in there moving forward. Now, if we get into some of these individual names, let's run through them. Apple, tough day on Friday, closing at some very important support down here, right around $94. It's trying to hang in there. Again, bearish formation on these fast-moving averages. Not a whole lot of support to cling on to. If it starts to break this level here, you'd have to kind of zoom out and either do some fibs if you're into that, or really just some of these round numbers down here, because could easily start to fall into the $75, $80 area if this really starts to give way. So we'll have to see what happens with Apple, if they can support this right around this $94 level. Next, let's look at Netflix. Continues to get beat up, losing some major support here over the past couple of weeks, right around these low $90 levels. Again, going to a weekly time frame, there's a lot of air in here as well that this could really start to unwind further, making this one quite vulnerable. Now, granted, it's had a pretty big move already off of its highs, but again, if we really are seeing an unwind in some of these big growth leaders that we saw for the past couple of years, you do have to be careful on this one. Looking out, there are a bunch of gaps here. Looks like it filled one on Friday, going all the way back to May in 2015. There's a big gap here from April of 2015. So could have some big targets there. Not sure how that unrolls, but right now, certainly the bears favoring that play. Amazon, similar situation, big 6% down day as well. Coming into some support here right around $500. So let's see if this can hold. It's pretty stretched to the downside, but similar comments to Netflix. It's been beaten up. I mean, you got some more levels to work with. This $500 in particular, down around $450, but still, certainly scary unwind can start to happen here if this continues. Again, perhaps, maybe some good buying opportunities for those long-term accounts. That is actually what I've been doing in some of these names, but that's more of a longer-term investment thesis on some of these. Facebook, this one getting hit as well, starting to cover this gap here from earnings. Have to see, perhaps it comes back down, retests or fills this gap right around 98, this $100 level. Still holding up, certainly the best out of all of these names because of all the multiple levels of support below us still. So still just really testing this 20 period exponential moving average. Let's see how this acts heading into next week. If we look at Tesla, this one's certainly one of the big breaks here of support. If we go to this is a monthly time frame, but you can see losing this 180 level, which is very critical. Weekly time frame, you can see it even better. So this one's certainly vulnerable. Down here all the way to 115 was this last major pivot in 2013. Some support in here right around 130, 140, 150. So we'll have to see how this one acts. Got earnings coming up in Tesla still, so keep an eye on that one. Certainly stretched to the downside, but momentum certainly favoring the bears. If we look at Twitter, continues to be a mess. Just trending very cleanly to the downside, starting, seeing some signs of maybe short-term bottom trying to be put in here, but no real evidence, hasn't been enough strength here to confirm any of this strength. Just look at the slope of all of these fast moving averages, still very much controlling price behavior to the downside. Finally, if we look at Alibaba, this one is making its way back down to the 2015 lows. Looks like that is an ultimate target for it. Maybe we could put in a higher low, which would be constructive, but still just really tough behavior right here. Nothing that makes me want to try and bottom pick this or jump in on the long side in Alibaba. Finally, GoPro, I guess we'll talk about that one real quick, had earnings. Initial strong gap lower, but you did see that get filled pretty quickly and it did outperform and try and get going here on Friday on a market day that was really soft all around. Perhaps there's enough pessimism in this name now where nobody wants to own it. Everyone's been successfully flushed out that this can actually start to rise. Still so early though. I mean, even with a nice move here on Friday, we're still basically at we're still below the 8-period EMA, which is very negatively sloping lower. So it just needs a lot more time here in GoPro before I'd even want to try and pick a bottom there. Getting into some of these individual names, let's start on the bearish side. I think if this market does start to roll over, FAZ, I'm going to look at some levered ETFs here, inverse ETFs. But if the financials continue to see weakness, look at the way this one's been forming here. Some resistance to take out right around $57. Of course, you're going to be looking at XLF, but keep the FAZ trade idea on the table for the levels. But back above $57, if we can get it below above and continuing from Friday's highs, I think that one can get going. UVXY, this one here at a pretty important level, back above 46, that can start to move. SQQ, which we know that the Qs are in a pretty vulnerable state. This had a huge surge on Friday, just given the move. Again, these are all, things that are already on the move, so, do your due diligence, but just vehicles to play on the downside if you do think this market's in store for continued rollover. On the upside, if you want some long ideas, a couple of names that I was looking at, WM is one. This is a weekly chart, but you can see how this is holding up really nice, kind of in this nice handle formation here. Start to get above $54. That looks interesting. And then finally, WOR, this is one in that basic materials sector, steel play, that we are seeing some of that rotation move towards. Had a tough week this week, but look at this pattern here, nice kind of basing out after a long-term downtrend that it's been in for a couple of years. If it can start to get above $31 and $31.50, I think this one could be interesting for a longer term kind of breakout play and move higher. So keep an eye on this one. Not ready yet, but something I'll be watching over the next couple of weeks. And that's it. That's what I have for today. Long video. Hoped it helped though. As always, thanks for watching. If you like the videos, do subscribe, bottom right hand corner, and I will catch you guys next time.